Hey, what's up, guys? Welcome back to another video. Hope you guys had a great trading week. Hope you guys were able to have a pretty good trading week in general. I think itself there was some good opportunities. I think it was a pretty overall lackluster week just because I think the volatility was pretty dead overall. But there was a few bit of a good opportunities there and then. So if you guys were able to catch those, if you guys have not already, I did upload a YouTube short this week, and it honestly was pretty great. I was able to capitalize on a short trade, and I was just able to not only adapt to the conditions we were in, which were low volume, low volatility, and scale out as we continue lower, but I was also able to hold a runner in the case that we had an increase of volatility. And yes, we did have that increase of volatility, which allowed me to have more profit on that last runner. So overall, it was a pretty great trading week for me. I think I took another couple trades overall. I think it was still a bit slow, nothing too big. I think that day itself was the biggest day. And yeah, overall, it was pretty balanced. And, I think today's video is going to be really short. The reason why is because it's a pretty important week, and for one thing is, for starters, as you may see, the charts look a little bit wonky. I think if I were to show you, they look a little bit wonky. If you were to see the weekly TPO, it's a little wonky. Reason for that is there's contract rollover. So basically, for futures, there's certain monthly contracts, and the September contracts we were just in just expired because obviously there is a certain date within September that expires, and it just happened to be on Friday was the final day. And today we roll over to the December contracts, right? And so whenever we hit the new year, which is probably gonna, or sometime in middle of December or something, we're gonna have to roll over to January contracts. But once you roll over, they're gonna have some wonky looking things, and there's two things that could happen, right? There's two things, and I think there's no correct way, right? But I will give you the one I do, and for me is I don't back adjust, right? There's two ways, and I'll happily show you guys here. Here, as you can see, this is a massive gap up that we had from that contract rollover, and if you were to go back, I think let's see over here, like in when we did over here, actually we didn't really have that much of a gap up, which is kind of crazy. Here we did have a minor one, nothing too crazy then, but there are days where there has been some pretty massive gap ups. It just happens to be that the one we're in right now isn't the biggest, right? You could see that there was some here. If we were to continue, let's just double check. Look, there was another massive one. So realistically, it doesn't really matter because for me, this is not really a true gap. It's just going into the next futures contract, right? And I don't want to go into the dynamics of it on why this gap up is because for starters, I don't know too much about it, but I do know that if I'm not wrong, the future dated contracts have a higher price due to the time, right? As you may know, a futures contract has a certain time till expiry, right? And the further outdated that contract is, the higher the price is. And if I were to go look at possibly January contract, it's very possible they're going to be a lot higher just because of that, just because of that being having more time before it expires, which obviously increases the premium. So I think that's where it derives from. Again, I could be wrong. Don't take it with a little bit of grain of salt, But again, it doesn't really matter because for me this is not really a true gap. However, it does affect a lot because one, there's two methods. One is not back adjusted, which is what I do. When it's not back adjusted, that means this gap stays on the chart, right? However, the other one is back adjusted, and if you were to go here on the futures, this is just Thinkorswim on Schwab. If you go here, adjust for contract changes, if you were to do that, as you may see, that gap is no longer there, right? However, it does affect everything. It does affect all the levels, as you may see, all the previous levels I had. But again, for me, I don't think there's a right or wrong way of doing it. But just for me, it is not. I don't back adjust, right? And so I think that's just something really important to take note of. It's gonna be a really wonky week just because, and I have these like just two levels and one level actually I have. So one thing is I only look at Fridays because if you could tell on the previous day on Thursday, we actually had kind of like a very low volume profile or just low volume in general. And Friday was on the actual day where we actually had a little bit of decent volume. And for me, volume equals interest. So obviously, I'm not going to take into account these previous level, just this Friday level, right? But we do have a couple levels here. So one is going to be that December settlement price, and that settlement price is going to be 66.45. How do I get that? If you go online, and just to pull it up for you guys, if you do guys go online and just go to the SME group, and you guys go over here, search up the E-mini S&P 500, go to the quotes, it will show you the prior settlement of these. And as you may see, similar to what I was telling you about, the higher we go and the more future we go on these future contracts, there's going to be more a higher price on that, just because it's gonna be a higher premium to have it's going to be a higher premium to have more time to expiry. If we are expecting, and this is what they're looking at in these contracts, if we are expecting the market to continue to go up within these next settlement prices, these prices are going to be much higher. It's going to be much higher, and so that just takes into account the premium for the time and stuff like that till expiration and things like that. And you may see it just continues to go up until a point where 2030 is going to have a 7,680, 6,7686 basically. And that doesn't mean that it's going to hit that price. It's just the price of just settlement where people expect, the options or not the options contract, but the futures contracts to be an appropriate price. And so those are the reasons why I have those marked out. And you may see here the December settlement price and the September settlement price, right? And there's going to be two levels I look at. As long as we continue above that settlement price, it's going to be really important. Just because the way I explained, settlement price is just going to say, okay, for the futures contract, the settlement price was 66.45. So for them, it is a just price. It is a fair price to start the new contracts here, right? Compared to the December ones where they were at 65.88.25, right? So this is going to be kind of my weekly bullish, weekly bearish, and it's going to be kind of confusing, and I don't put too much emphasis on them, but I will look at them very importantly, just because if we are to get back within the settlement price of September, then obviously we will go back and look at prior levels that we had at September, and I see that as pretty bearish because obviously we are now now one below the settlement price of December, which is again that fair, that just price that we settled at for the new December contracts, and now we are within the September price, which is going to be something important. Again, it's just something I look at, and I think it's pretty important. And then I also have the 6660s where we had that kind of small little excess at the highs, but nothing much to say when it comes to that. But it is still a pretty big week, not just because of that, but we also have, if you look here on the calendar, we have FOMC on Wednesday, which for me, I never trade on FOMC days because one, in the morning, if you go back on all the FOMC dates, in the morning it will be slow. There are certain times where it won't be slow, but on majority of days it will be slow, and it will continue. It will wait for FOMC. FOMC, as you can see, is at 2, and at 2:30 is when Jerome Powell speaks, and so at 2 is when there's a large spike of volatility, which I do not. Well, a lot of people trade it, but I do not recommend trading just because it is more like of a gamble rather than actual trading. And so the majority of the morning will be just slow and choppy until leading up to that big news. But till then, Monday, Tuesday I'll trade, Thursday, Friday I'll trade, and yeah, just be on the lookout, for that possibility of do we stay above the settlement price, do we stay below, things like that. These 6660s are going to be very important as well. But other than that, I really don't have much level for you guys. It's going to be pretty rough whenever, contract rollover happens. It's good to let the market adjust, right? If the opportunity is there, it will be there. Like, for example, if we do open up within Friday's range, which is, you kind of see this range right here. And then for me, I have some back data to at least test the possibility of a trade. Compared to if we were to open up here in this middle of nowhere, it's going to be kind of hard to come up with just like a right analysis, just because we don't have any back data, which for me back data is going to be volume, whatever the volume by price is telling me, and we don't just have any backward data to really prove that. We don't have some data in the past that can help us prove that or help our analysis. So for me, it's going to be really important to be patient. If it does open up in the middle of nowhere, be okay with it. You don't have to trade every day, and I stand by that. And yeah, it's going to be a really short video today. There's nothing much else to say. Yeah, guys, be on the lookout for FOMC. Be on the lookout for everything. Have these two settlement prices on your charts. It's going to be really important. But other than that, hope you guys have a great trading week. There is a possibility of it being slow. Lastly, I guess to talk to you guys about it is I could definitely talk about the VIX, which is something very important. VIX actually expires this week, so be on the lookout for that. it expires this week and we roll over to October contracts. But other than that, be on the lookout because look, as we continue to drop and plummet on the VIX, and you'll see there's a lot of lines, but as we continue to drop and plummet on the VIX, it's going to be really just rough. Volatility is going to be low. As the VIX continues to go lower, volatility will continue to be lower, right? And compared to if you were to look back, look at these April volatility. Volatility was an all-time high for this September contract. So you remember if you did trade back when tariffs were being announced, back when that Armageddon Day or whatever it was called was being announced, there was a lot of volatility. It was insane. But now if you were to look at as we continue to lower, volatility would be low. If you look at the VIX, VIX is a volatility index. So think about it like this: if the VIX is rising, right, the market's falling. But if the VIX is rising, volatility is increasing. If the VIX is falling, the market is rising, but if the VIX is falling, volatility is also getting slower and lower. So be on the lookout for that. Other than that, really don't have much else for you guys. For levels for this week for the VIX, look at the 1585. Also look at the 16.2s. But other than that, nothing much for me. Hope you guys have a good trading week. Good luck this trading week. Good luck with FOMC and peace, guys.